Finance Committee meeting for September 22nd, 2025. Notice the presence of a quorum.
John Dart,
Here.
Patrick Tam,
Here.
Woniger.
Here.
We have a quorum.
Okay.
Thank you.
Like a motion for the approval of the minutes from July 28th of 2025.
Approval of the minutes from July 28th.
A second.
All in favor, signify by saying aye. Aye.
Aye.
Okay, next item on the agenda is a presentation.
Do we have Dave online? He's here. There he is. Hi, Dave.
How are you?
I'm good, thanks. So this is Dave Goodale. Did I say it right this time or no? Goodell?
You're close. Goodell, yep.
Okay. And Dave is with Arbitrage Management Group, also known as AMG. And I've met with them on a couple of occasions to discuss what they can do for us. And I'm gonna let Dave take it away, and then if you guys have any questions, we can get to that when he's done.
All right, thank you, Marla. Am I able to share my screen? Is that okay?
Sure.
All right, let me know if you're able to see this.
Yep.
Got it? Good. Okay. All right, well, thank you again. So, as Marla said, I'm Dave Goodell. I work for Arbitrage Management Group, and we are a financial firm that, it's relatively small but nimble niche financial firm that we specialize in the safe investment of bond proceeds. Mainly debt service reserve funds, but we also help with project funds as well. We work with a few hundred clients around the country that have these type of funds. About 3/4 of them are cities and counties and those type of things that work, that are municipality related. We got over $2 billion in of these specific type of funds under management, and the company's been around since the early 1990s. Basically carved out a niche in this area. Many people aren't aware of that there's opportunities in this specific investment field. We work mostly with unserved or underserved municipalities and other entities to provide information on what is already written, already buried in a few different paragraphs in your bond's official statements. We'll get into what that looks like a little bit in a moment, but like I said, the 50% of the first meetings I've had with Marla and generally with anybody is an education, because most people aren't aware, what you can and what you can't do, and what the restrictions are, and what the opportunities are, and that type of thing when it comes to these bond type proceeds. So the foot in the door sort of was it was a 2016 revenue bond that the city issued almost 10 years ago. It's an Eagletown tax increment financing bond. That bond actually is, if you see the little chart there, was issued in 2016, I mentioned, and it doesn't mature until February of 2037. This is the only bond that I believe Westfield has that actually has what we're calling, or what is called, a debt service reserve fund, or DSRF. The DSRF, we'll talk about that in a moment, but you can see the numbers there. It's valued at about just over $350,000. The debt service reserve fund right now it's not right now, but it is I'll get to the key points here. You can see here, the debt service reserve fund was established. Not all revenue bonds have these. General obligation bonds generally don't have them at all, but not all revenue bonds do. A lot of them do have it, however. But it can't be used. It can only be used for making up a shortfall if you have a problem with revenues coming in to help make your bond payments twice a year. You may know, may not know, but you pay every 6 months. You're making payments to pay off principal and make interest payments to the investors that lent money for this bond. So this debt service reserve fund was really established, and most of them are, as sort of a help in terms of a marketing tool to help sell these type of bonds to the market. The thing with that reserve fund, as I mentioned, it can't be used for anything other than making up shortfalls in bond payments. Otherwise, it just sits there for the life of the bond. In this case, till 2037, and you can't do anything else with it. It just has to sit, has to be in place. 98 to 99% of the time, municipalities will never touch this money. It's there as a safety net. Like I said, it helps market the bond. It gives your bondholders peace of mind that if there were some kind of an issue, that they're still going to get paid. But more, like I said, more times than not, this money is not going to be tapped into at all. So it's just idle, sort of dead money that's sitting for the life of the bond.
Hey, Dave,
A rule of thumb with the reserve. Yes, sir.
what happens let's say it doesn't get touched, what happens at maturity with the dollars?
At maturity, it'll go towards the last bond payment.
Okay.
Good question. So, a general rule of thumb with this amount, and it varies depending on the underwriter and who helps you write, and the bond counsel to write the bond. But the general rule of thumb is the value of this debt service reserve fund is about 1 year's worth of interest and principal payments in all total. So when I looked at your payment schedule in the official statement, it's all right around $350,000 a year. And Marla, you probably could attest to that. It's basically what you're paying your bondholders every year. So again, it's 1 year's worth, and it's rarely tapped into, and it's just there for as the safety net. Going to key point number 2 here, the bond counsel that wrote this 9 years ago, they put a provision in there that said that these funds can be now actively invested. Right now, they're sitting, if you see this little bullet point here, they're sitting in an unmanaged variable rate account, money market account, but they can actually be proactively invested. And it basically says per Indiana law. That's what it says in the official statement. Well, that Indiana law, in terms of investments, is Indiana Code 513, which also your internal investment policy references as well. But it's really extremely safe type fixed income investments. You'll never see anything in terms of, since this is public money, you'll never see anything as stocks or equities or any speculation or anything like that. It's all fixed income where you're going to be guaranteed to get 100% back of your principal, as well as getting interest. And the Indiana Code allows for a handful of investments, and it's U.S. government treasuries, which are still today the safest in the world. U.S. government agency bonds, which are sort of like a Freddie Mac mortgage bond or a Fannie Mae mortgage bond or a Ginnie Mac school type bond. It also allows for Indiana municipal bonds, which I'll talk about in a moment, which is an interesting caveat. And then CDs. We don't recommend CDs for these type of bond proceed investments because they're not as flexible as these other type of investments. So if you needed to tap into them, you wouldn't be able. It'd be much more costly in terms of penalties and withdrawal costs and stuff. I mentioned out here, very safe. Once the rates are locked in, again, it's like any investment where you lock it in, that won't change for the duration regardless of what the market does. So that's the idea, is sort of trying to lock in what you can, especially as we talk a little bit more about what's happening in the economy and what happened last week with the Fed and all that kind of stuff.
These funds to be actively invested per bond document and for Indiana.
Sorry, I'm taking notes.
Again, I'm sorry.
Sorry,
Dave,
taking
we
notes and hit the button for, the audio, sorry.
Oh, okay. No worries. Last point, this key point here I wanted to mention was that these funds, my firm doesn't take custody of these funds. They always stay with custody of the bank or brokerage firm or trustee bank in some cases of your choosing. You have control of that. You have access to it. All I'm doing is providing strategic advice and recommendations based on all the years of experience and then what we know about what's going to happen in the market. So basically, sort of a consultant role. Any questions to this point? I did want to hit on. So our firm is called Arbitrage Management Group, and if you may or may not be familiar with what arbitrage is. It can be a variety of different things depending on the context. But in the context of these revenue bonds, or any municipal bonds for that matter, U.S. tax law does not allow borrowers to earn more than that you borrowed the money for. If you do earn more, and in this case, this rate for this bond was 4.9%, it becomes an arbitrage bond, and any excess you might have earned above that 4.9% over a period of time would have to be sent to the IRS or to the U.S. Treasury. I don't think it's an issue with this specific bond because you issued this in 2016 and interest rates were low 3/4 of the time, well below this number. So I don't think it's an issue, but I just wanted to bring it up to your attention because we do work with issuers and borrowers that have bonds that have that potential issue, and we work to manage the investments for them to try to make sure that they get up to but not exceeding what you can earn. Because why earn more if you can't keep it? That's sort of the idea. There is one exception I mentioned up here. One of the options you have is an Indiana municipal bond. If you invested in one of those or some of those, you can keep any excess above and beyond the cost of borrowing. And the reason behind that is that the government wants to incentivize municipalities to reinvest in their own communities, basically, and not get penalized for it. So it's always a possibility to use those. It just depends on what things are looking, what the yields are looking like, and that type of thing. So when we talk about some project fund related topics, that it may come into more, it may become more applicable. All right, so let me just go on to just start like a funnel, come down from the big part of the funnel down to the smaller part. So I want to talk about what the Fed funds rate is, and what it means in terms of what we do, what I do. So this chart you're seeing here is the federal funds rate timeline from 2008. Last week, whenever you hear the Federal Reserve talking about cutting or raising interest rates, it's this rate, this key rate, the Fed funds rate. Last week, they actually cut the rate 1/4 of a point if you follow the news last week. What this chart is showing you, as I said, it goes all the way to 2008, but if it were to go further back in time, more times than not, probably 80% of the time, this Fed funds rate is near zero. It's good for people that are borrowing money, for mortgages and car loans and that type of thing. Not great for short-term investing. But when after COVID, when everything was shut down and things started ramping back up again, and the government injected trillions of dollars into our economy, it helped part of the cause of the inflation that we've all experienced, and it skyrocketed in a span of a year. And so the Federal Reserve uses this Fed funds rate to try to rein that in. So they increase interest rates in parallel, basically, with what inflation was doing. They actually raised interest rates all the way from mid-2022 to late 2023, from near zero all the way up to over 5%, 5.5% actually. And they maintained that rate for about a year. That de-incentivizes people from borrowing money and tries to get money out of the economy. But it does help for people that have monies in short-term funds like money market funds or checking accounts and savings accounts. So you're going to see, you would see that you would get a little bit better yield better yield based on the fact what the Fed does. Last year at this time, they started reducing that rate. They reduced it down about 0.75% in the span of about 3 months through last December. And then they took a pause, seeing what was going to happen with tariffs and what the economy was going to do and that type of thing. Well, as I mentioned at the outset, last week they finally decided to start cutting again, and they cut another 1/4 point down off of this rate down to 4.25%. There's actually 2 more projected cuts this year, with more to come in 2026. The reason this is important in our discussion is this Fed funds rate, it directly correlates with any variable rate account, including money market accounts, which these bond proceeds sit in. Whether it's that reserve fund or project funds that you have in other bonds, they're sitting in the bank in these money markets that have been doing pretty well the last few years, but now the last year plus have been coming down, and there's more projected cuts. So like I said, they lowered it by a 1/4 point last week. And then according to this chart here, what you see here is we subscribe to a Bloomberg service. And the dates you see here are the next Fed committee rates. And there's a 90% chance there's going to be a cut at the end of October, 80+% chance in December, and a moderate chance as we get into 2026. These percentages change over time as things in the economy change in the world. But the writing is basically on the wall that we're going to be down probably a whole percent between now and next July, so that any money markets right now will be down that percent as well. So let me stop. Oh, here, the last thing here. So the idea here is you can hedge against these type of reductions by putting those bond proceeds that are in those money markets into some very safe short and medium term securities that are fixed. The ones I mentioned above that are allowed by your bond indenture. So before I get into more of the specifics on that, any questions or clarifications on any of that? And it's a lot of information, but hopefully it makes sense.
Greg, based on what the city's currently bonding, how many of our bonds do we currently have out there that we're doing this on?
Doing in terms of what? I'm
The
sorry.
debt service reserve fund?
Oh, that 2016 bond is the only one that has a reserve fund in it. I mentioned at the outset. We can talk. I do want to talk about the existing bonds that actually have construction funds, because those are investable too. Different strategies, different approaches to that. But the sort of open foot in the door type thing is the reserve fund, I think, because that's idle money. You're not touching it at all, unless you need to tap into it, which hopefully you never will.
And
I'll talk a little bit about the other aspects.
those funds, have you looked at those to see if those are currently being invested this way or not?
Yeah, the project funds, I saw a statement last week. They're sitting with Huntington Bank, or it's now Argent, and they're just sitting in their money market. I think it was earning 2 3/4%. Now it's going to be down to 2.5% with the new rate cut. So nothing's being actively invested in, to answer your question, from what I could tell.
So we don't handle.
Is that true, Marla? Would you agree with that, Marla?
Yes, and we've always had the trustees, because I think this is an ongoing question, you can't see the looks on faces, Dave, but I have never directed the trustees to do anything different, right, than what they do. And so, the education here is that perhaps AMG can better help manage those trustee accounts. Perhaps it's not so much anymore to make more money, but certainly not make less. And it would be an enormous task to try and direct the different trustees with all the different bonds. And I have no background in that. I wouldn't even feel comfortable doing that. So I have, to this end, trusted the trustees. And that's what's always been done here. So as Dave keeps saying, the foot in the door was simply the one account, and I do have that invested currently, as he said. It's in the money market account, which is now just over 4, used to be, at 5, but it wasn't invested until last year, when I checked to find out if we could actually invest it. So we're making money on it that we didn't make before, and that's great, but I would kind of appreciate their help, and maybe at some point, Dave, you can get to, I'm sure everybody wants to know, what does it cost to have AMG as consultants? So if you can tackle that somewhere in your presentation.
I do. I have a point. If I could table that to a little bit.
Sure.
Moments from now.
Yep.
I did want to make a comment about the trustee relationship. When these bonds are funded at the beginning, the trustee bank, if it's in a trustee bank relationship, they're going to take these funds and they're always going to default it to a money market. They have no vested interest in investing. In fact, they're not actually capable of actually doing investing themselves. They have 3 roles in their role as three functions as their role as trustee. One is to hold custody of the money, which they will always hold custody regardless. As I mentioned a moment ago, I'm only here to provide advice and recommendations and strategies based on my knowledge, but the trustee, the bank, is always still going to hold the money. The second thing they do is they provide statements to you every month, and then they make the bond payments for you as also the paying agent. So they're the ones that are going to make those every 6-month payments to your bondholders. They can't provide advice. That's not a role that they can play in this setup. And they'd actually rather you keep it in the money market because they can then lend that money out like any bank can. That's in a cash liquid account for other purposes, whether it's a mortgage or car loans or whatever. So I just wanted to throw that out there. They have their role, and it's not what I'm proposing. So
Yes.
all right.
Landon,
Any other questions here?
just for reference, so Landon does watch kind of these things. Again, we don't have control over the investments. We thought that you were kind of handling all the investments thing. We can coordinate better if Marla wants to with Landon and Oscar's oversight, and Oscar is our MA and can definitely help with that part of it. But like for that end, like Landon really helps oversee kind of what that structure looks like on those bonds and looking at kind of the best foot for the city, making sure that we're getting the right price in the market.
So Dave, that is the deputy mayor
Yeah.
speaking, in case you cannot
Yeah.
discern who everybody is. And Landon is with Baird.
Okay. Yep. We see that a lot. We see a lot of your financial advisors and that type of thing to provide guidance. They don't generally get involved in the investments themselves, so especially these bond investments because they're very niche and there's so many nuances that are different than standard investments or standard monies, if you will. All right. Any other questions? I got one more page here. Any other questions before I go into a little bit more of the detail and some of the true benefits and also to answer Marla's comment about how I get paid?
I'll continue.
Okay. All right. So in terms of the reserve fund itself, we recommend generally a laddered strategy for most of our all the funds, whether it's a reserve fund or a project fund. But the idea would be here would to take the amount of the reserve that's the total amount of the reserve fund and breaking it up into a 1 year, a 2 year, and a 3 year into thirds. And then just taking a mix of what's the best available treasuries and agency bonds, or maybe the Indiana municipal bonds, and locking that in. Right now, those bonds are yielding between 3.2 to 3.4%, which is lower than what the money market is earning right now, Marla, in this. But that money market's going to be coming down as interest rates are coming down. So it's the idea of a year from now, you're probably going to be 1% or more down in that fund, and now you can lock in these yields today for the duration for like a 2-year duration, and know exactly what you're going to earn and exactly where it's going to go, what it's going to be. And this number here doesn't include any reinvestments. If when the first 1 year security comes to mature, we reinvest it again. That would add into the earnings for that duration. But anyways, that's sort of the strategy behind it. You're locking it in, not having to worry about what it's going to look like 2 months, 3 months, 6 months from now.
So you're locking it in for a third of it for 1 year, a third of it for 2 years, and a third of it for 3 years. Why couldn't you lock it in all the way through 2037?
You could do that.
But you must
the idea
miss some upside.
Nobody's going to know what the economy or the market's going to do, and you may be in an area where you lock yourself in, and all of a sudden, 2 years from now, 3 years from now, you're wishing you weren't. So this is the strategy where we're able to take advantage of both sides of the yield curve, and be able to take advantage of being able to reinvest sooner if rates do swing up the other direction, and then lock in at this type of a yield if, as we expect, the rates are going to decline. And the other thing is, again, this is reserve fund, so you want to have some access to it just in case, but you don't want to put all your eggs in one basket and let it out for another 12 years just because you might need to tap into it. So it gives you some liquidity, but also takes advantage of what's going on in the market and the various opportunities in the medium term.
Thank you.
So anyway, like I said, you lock this in, you can guarantee what you're going to earn. With the money market, you can't guarantee. I always like to ask the question, what nice to haves can you use this guaranteed income for? a lot of times in some of these bonds, the excess earnings go to help make bond payments. That means that's less you have to put in from other sources, and you can use that money for other things. So it's nice to know exactly what you're going to earn over a period of time, over the next couple of years, let's say, and be able to budget for it and say, hey, we need some new computers, or we can help do this or do that. In the money market, you just don't know. It's been nice and it's been relatively high the last couple of years, but it's coming down, and there's no control over that like you would have with this. One other point I did want to make here, as I mentioned, rates are projected to continue to drop. So these approximate net yields, don't know what they're going to look like in 3 months or 6 months. These yields for these specific type of securities that you're able to go in, they've dropped about 30 basis points, or 0.3 of a point since last June, as investors were anticipating that this last week's rate cut was coming. So if there's another rate cut, which is projected to come in October, another one in December, as I mentioned, then they decide to start moving more money into these short and medium-term bond investments, which increase those bond prices and further decrease these yields that people that aren't invested in can get. So that's sort of the point behind it. If you lock something in today or tomorrow or whatever, you know what you're going to get. Whereas if you wait until another rate cut happens, then you're probably down another 30 basis points, let's say. So that's just the thinking. There's no. I always like to say the best time to invest when you're investing in fixed income investments is today. The next best time is tomorrow. The third best time is the day after. You know what you're going to get today. No one can really ever time the market properly, whether it's stock market or bond market. But you know what you know today, and you know what you can expect to know in the future, and just make your decisions based off of best available information. Okay, so just getting to your points, Marla, one of your questions. Some of the benefits here. So there's no out-of-cost pockets to any of our clients, including would be Westfield as well. So there's nothing to budget. We get our commission. I get my commission only when securities are actually purchased. So if we were to sit down tomorrow and make 3 purchases for you, there's a commission that goes that's associated with that, similar to if you were to buy a bank CD for your own personal use. You go to the bank, they give you a yield. You don't pay them anything for it, but there's a little bit of excess above that the bank makes. Same thing like with a realtor. You're buying a house. They have a little real estate commission. You don't pay that out of pocket. It comes out of the purchase of the home. So it's the same thing here. We don't bill anything. There's no invoicing. I get my commission at the time of the purchase of the securities, and only then. There's no ongoing costs. But at the same time, as you guys would be a client, I continue to manage the portfolio, not manage it in terms of trading, because we're not day traders or anything like that, but monitoring the market, seeing if there's anything extraordinary that happens that you might need to know that I would want to convey to Marla or whomever, to see to make decisions going forward that might be different that we made previously. So I'm always continually working on your behalf, even though I only get paid at one time, and that helps make me want to continue to earn your business, because we don't have any contracts or commitments either. We have some set of disclosures we ask you to review, and a document that's called Know Your Client. It's basically asking some questions about your experience of investing and expectations and some contact information. But there's no 3-year commitment, 2-year commitment, 1-year commitment. It's a constant relationship development. And onboarding is really quick. That's the only documents that we ask for. And they're not, like I said, it's not a contract. So
What is your commission rate then?
it goes for anywhere from 0, which is not 0, but a little above 0 to 50 basis points, somewhere in the mix there. So it depends on the actual security. It depends on the duration of that security. It depends on the purchase price of the security. So I can't give you a definite, but it's somewhere. We're maxed out at 50 basis points. Somewhere in the mix, somewhere in the middle there. And that's what most firms are. I mean, all financial firms that do a commission base are all capped out at 50. It's a FINRA rule. Okay. Bullet point number 4 there. Oh, were there any questions on any other questions on the commission or the the no cost, anything like that? Any clarifications?
The only thing I've got, if you could wrap it up in the next 5 minutes, we have other business to conclude.
Got it. I'm at near the very bottom here. So the idea would be is, for AMG, for me to come in as a key partner for the city as well as for the financial officer, in this case, Marla, using our experience, and basically help, like she had already said, help expand her bandwidth a little bit more and no cost. And then I know there's some succession planning that's coming here in the next couple of years, and we can set that foundation to be able to have something in place to help in that transition for her replacement. And one of the things here too is that this financial officer, whether it's her or her successor, makes the final decision in all of this. We don't have discretion. We don't make the decision saying, here's what we did. I create the strategy. I provide the recommendations. She signs off on it, and then we go forward. The other thing that we bring to the table in addition to this reserve funds is other bond proceeds, like these project funds, existing project funds, construction funds, or new project or bonds that are being issued with funds. And I mentioned before, we can also put together a very safe and conservative strategy to make sure that there's more than enough liquidity to pay the bills every month, because those funds are usually spent between 12 and 24 to 36 months. So whereas the reserve funds, we can go a little bit longer. For these funds, we do maturities of monthly, quarterly, whatever makes the most sense. But you can actually earn a decent amount more, because I know in the funds that they're in right now, they're earning 2.5%. And we can probably even get, since these short-term yields are higher than some of these longer ones, we can probably get higher than 3.4, 3.5, 3.6 for those project funds. Marlon wanted me to mention that we did a recent, we just brought on a recent client in Shelbyville, which is just southeast of you guys. They have one rental revenue bond from 2021, and I locked in rates early last month as those yields, as I mentioned, started falling in anticipation of the rate cut, and they're expected to outperform their money market, and they were also with Huntington at a lower yield as well. So we locked those in, and now they don't have to worry about rates coming down like they are coming down. So summary here, you can predict the income. You can use that excess for X. No out-of-pocket costs. Strategies managed. As I mentioned, the city approves before we make any purchases. Ongoing monitoring of the market. And then there's not much time investment purposes in terms of onboarding and ongoing. So like I said, no day trading, nothing like that. We set it, and then it sort of goes. And if anything on the out of the ordinary changes, that's when I would reach out and have a conversation. So it's pretty easy. It's almost like in my opinion, it's almost like a layup when if you're using a basketball term. And it's not that much in terms of investment, in terms of time, or no cost whatsoever either. So that was the end. That's all that I had. Any questions? Any comments?
Any questions? Okay. Dave, thank you for your time and the presentation today. We'll take it under advisement and work with the clerk treasurer, the city administration. And as we transition to a city here in a couple of years, we'll take that into account and look at opportunities. And if necessary, we'll get back with you.
Okay, appreciate it.
Thank
Thanks,
you.
Dave. I'll be in touch soon.
Thanks a lot. All right, bye-bye.
So was this the second presentation then?
No,
The first one was
That was
Um,
a different group.
that was Gravity.
Gravity, which
Yeah.
was
Totally different.
Okay, I thought you were bringing,
Totally
bringing in
different.
two firms to compare it to each
Oh,
other.
no,
Okay.
I wanted to bring them in on the same day, but it would have been too much
Got it.
presentation.
Okay.
So,
Did anybody want to have any other further discussion? The presentation's closed, or we good? Good. Okay. Let's see, next things, investment updates. There's no file attached.
well, again, I'm working, I had a recent meeting with the bank and told them that I'd like them to start putting together kind of a one-pager for you, since you haven't really defined what you want it to look like. We are actively working on that. Today I can tell you that we still have just about 8 million of general fund dollars invested in the money market account. Treasuries are 23.3 million. We did have two recent maturities, one that was 2.5 million, one that was 5, and then I reinvested those, but in 3 different treasury notes, each at 2.5 million apiece. So
And so when you talk about those investments, who's advising you and helping you make those investments?
so that's Ted at Huntington, and he is our treasuries manager.
Okay.
So we have a team of people from Huntington, each who have a very specific role in working with me. One is sort of an account manager, one is the manager across all accounts. Ted is actually in Ohio. So anyway, they work together to help me do that.
Okay.
So we got some better rates on those 3 bonds that we recently reinvested than where they have fallen to recently. But is there anything specifically that you'd like to see when I speak with the bank again on your investment report? Like, do you have a specific stylistic way you want to see it? Or what is it that you're looking for overall?
Just charts, graphs.
Charts and graphs? I kind of told them I thought that would be appropriate. Do you want like a dot plot of where the rate, because obviously it's been falling, it's now, as of this morning, it was 4.16. Used to be over 5. Is that the type of thing that you want? You just wanna see of all the investments, like a pie chart, or?
I don't know if I can answer that
Yeah, I don't know if I could either.
Okay.
without looking at what the options are. I mean,
Okay, or maybe you wanna see like what's in the money market account, each
I
Each
mean,
bucket?
Huntington does this probably, I would assume, for multiple.
Right.
I mean, just have them give us what they
They
do.
really don't, they indicated that they did not, but they were very open to doing it for me. Part of it's kind of lack of time, so we thought, well, maybe they'd build it and it's something I can update monthly for you and then always have it attached. But they're totally amenable, so Kelly, is there?
I guess one of the things I would say too is we're gonna be transitioning in a couple of years anyhow to a second-class city, so I would probably ask for Kelly and John Rogers and your guys' team to probably put together what you would wanna see as well.
There's a report actually that another municipality did, and I used to put it together for them, and I'll send it to you.
Sure.
And then we can maybe build off of it.
You can send it
So-
to us for some ideas.
Yeah, I'll send it to you, yeah.
That'd be great.
And see if it's something that would give you the information, but maybe there's some things that we could talk about, see if you've got some ideas to maybe present more charts and
Yes.
charts and graphs. Cause this is more just, here's the investments, here's which bank it's invested with, here's the type of investments. And it's and basically it's comparative, showing you where we are today, where we were last month, even kind of a year ago. So it has it's a comparative graph, but then it just breaks it down by investment, by account.
We
by
can
bank.
absolutely do that. I mean, obviously I have that information, but it's
Sure, yeah.
kind of boring if it's in a screenshot.
Right. So we could, you could have the screenshot that lays it all out, and then kind of, you could work your magic, Marla, do some nice, cool charts and graphs to
Sure.
make it a little bit more easier to digest.
And I guess one of my questions would also be is, if we had to get access to these funds, how easy is it to get access back to them? Are they locked in? This money that's been invested?
So the money market is the Goldman Sachs account, like we've talked about, probably ad nauseum, but those are funds that we can get back in 48 hours if necessary. The treasuries obviously have maturity dates, that I cannot invest beyond 2 years at this juncture, nor would I. But that's what's on the ladder, and I'm thinking that is part, like I've presented it before, but I'm thinking that's what you wanna see. But I think my question comes out of it, it's somewhat somewhat atypical maybe to do, from what I've been told, an investment report every month, because a lot of times there's not a ton of activity more than you're earning interest. And so I've been kind of looking, you know, to get your feedback, so I
Sure.
think what Kelly has in mind is certainly amenable to me. I just haven't really gotten much in the way of feedback, so I appreciate that.
Yeah, no, I can help you, and then it's kind of like one of those things, once we set up the template,
Yeah.
it should be pretty easy to
Right,
update,
right.
you know what I mean?
And that's really what I talked
yeah.
about with the bank.
Exactly,
Yeah.
yeah,
So,
Yeah.
great,
I'll send it to you.
okay, thank you.
Any more questions or discussion items for the investment updates? Okay, we'll move on to the revenue summary. And this will be for a reporting period of August, right?
Yep.
Was there any anomalies you saw in here in regards to revenue coming in or changes?
Well, I have kind of a breakdown of maybe what I thought would be interesting. I had done both kind of a 2024 to 25 comparison, and then just kind of a comparison within the year. Again, I'm not quite sure how you want the delivery. In the general fund, I would say we've had significant growth in the revenues, which I think is great. They're up like 35% year over year, which is fantastic. Do you guys, do you have any questions about anything concerning to you?
Nothing stands out for me.
Okay.
What's the Grand Park Diamond escrow? That one had a loss.
So the Grand Park Diamond escrow was the money that they were paying for the turf account, I believe. But since they have management of that now, they're not necessarily paying into that.
That account's effectively dormant.
Dormant,
I mean, is what-
okay.
Yeah. More or less, yeah.
For food and beverage,
Mm-hmm.
Danielle, would we see probably an uptick for next month in September from stuff maybe with Live Golf or anything, or if there would be an uptick?
If it would be,
How did that work out there with food sales out there? How did they do that?
we did not get any special, cause that was an event with an event permit.
So all their revenue was generated within Live and they kept it and it was all their own vendors, is that how that works?
Outsourced, yeah,
They've just been local restaurants or?
it would be the local restaurant
Oh.
uptick.
So ours are up about 11%.
Any other questions on the revenue summary? Fund report?
So there are some significant levels of spending from the fund report that might put some pressure on some of the budgets towards the end of the year. I think if you're kind of looking at them holistically. But do you have any questions about the fund report?
Well, which line items are you referring to?
So we've got a high level of spending on services and consulting, both in admin and IT,
Which line items?
services
That's
and
under general.
consulting.
Under, okay.
Yeah, sorry, the general fund,
Gotcha.
yeah. And then, of course, mine, for my budget, also within the general fund, the consulting services, were increased largely due to the ACFR, because we added Baker Tilly and Forvis. So while we're busy paying Baker Tilly for their work currently, I haven't gotten a bill yet from Forvis, only because they just started last week.
And do you have any idea whether there's gonna be an invoice before the end of the year?
Oh, yes, absolutely.
Absolutely.
Several, I would expect, so.
But no idea what that, how much did you budget?
Uh,
For Forvis 250 or? That what it
I
was?
don't recall offhand for for last year. What you and I talked about, that's for next year.
That's for next year.
So, I'd have to go back and look, but I didn't bring that number with me. I think it was higher, like 350 is what I wanted to say, but I don't know,
Before this audit, I thought the contract was like 160.
164 or something.
Yeah, I was gonna say 165.
so, but I'm talking about like what we budgeted last year for this year.
Oh, sure,
So,
sure.
yes, I have definitely some, responsibility in that increase, under that line. So, but other than that, nothing concerned me really about the fund report. Oh, you know what? Let me back up. Well, that's really appropriations.
Yeah.
We do have two funds, that are in the negative that I would like to maybe just address. One did not have a budget and the other one, did. But it too is in the negative. So 206 and, which is parks. No, it's not showing a budget either. And they're not huge negatives, but yet I'd like to fix them. Possibly before the end of the year, but certainly we can fix them at the end of the year, not a big deal. The other was 251, and that was one, that non-reverting that we put together for Kayla. Not even $500, but if we can address them, I'd love to.
We have money in that account. I mean, we've gotten sponsorship dollars that we've,
So the fund report should show it if it's there.
we have several $1,000s that we've gotten in sponsorships.
Do you
They're
feel like
allocated
maybe
to
they're
that.
not going into that fund?
That's where they're supposed to be going.
Okay, we'll double
I
check
can
it
pull a
then.
jet report showing that.
Showing cash treasure, cash balances over $7,000
Yeah.
there. So it should,
Should that maybe be the same thing with the parks or not?
no, they should also, cause they have revenues for rentals and stuff.
7,300.
Right.
Should be in there. Okay.
206 has 24,000 there, almost 25,000.
So, but they should not be in the negative.
Correct.
So,
So we can look at that.
Yeah.
And then I know that just to play off what Marla's saying on some of the budget line items that could be going into the negative, the directors are currently looking at all the additional appropriations that were unexpected, that weren't in their budget this year, so they're getting that to me, and they should have that to me by the end of this week. And then I'll kind of send out an email to you guys before I come to council.
Fund transfers.
Yeah.
And then also kind of align with this and along with the appropriation summary report, just like any contracts that are, are you guys gonna be coming to us in December for encumbrances?
Yep.
We've got all the directors working on those right now.
Many budget items right now.
Just make sure, when you guys bring that, make sure they're detailed well and explained well.
So I guess I do wanna just kind of distinguish between, the fund report is showing what cash we have, and then obviously the appropriation report is what's showing what's been authorized to spend. So it's possible that we just, we haven't done an appropriation in a particular fund, and that's why it's showing it's overspent. It doesn't mean we don't have the cash for it, we just haven't had the authorization, gotten the budget approved for that line item.
Which on non-reverting funds, I'm not sure, I don't think we have to have a budget for non-reverting, we can just pay out.
I think that since they're supposed to be budgeted, they need to be budgeted, but I wouldn't deny it. The cash is there. We just need to formally appropriate it.
Yeah.
It can be like, I think it could be a resolution among council, or even a conversation in public.
Yeah.
So that we can clear those up so they don't appear as negatives. And I apologize, I think I was saying it backwards, just not really looking at what I was looking at. So, many apologies there. Yeah.
So for the non-reverting fund budgets, I don't know how much I'm going to get in sponsorship revenue for 26. Like it's all dependent upon if people sponsor things. So how do I put together a budget for that?
I think you have to kind of estimate it. And then if you get a lot more and need more, I think you just come back and say, hey, I have this money available. You know, and I'd like to do that. It's kind of the interesting thing about non-reverting funds, right, is they start to build cash, but if it's not budgeted, we
I
really
just
shouldn't be
haven't had to
spending
do that in other cities, that's why I was curious.
It is more or less right, though, it is statute. Because you not only have to have, it is statute that in order for the fiscal officer to pay a claim, it not only have to have the cash, but you have to have the legal authorization to spend it, that's the appropriation. So, and I know it's tricky for the non-reverting funds. And it can be up to the fiscal officer to go ahead and pay it without, since it's a non-DLGF budgeted fund. But typically good policy is to go ahead and budget even if you're under on the budget because you've had an event that's more expensive, that's understandable. Hopefully council would be agreeable to do an additional appropriation when you've got the funding to cover it. But technically.
That's kind of the part that's been difficult.
It is,
Like,
yeah.
the nuance, especially with them adding the spending plan for RDC, because those are all cash funds too. So if the idea was, well, if you have the cash, you can spend it, why bother with a spending plan? It's the same thing with the budget process. You have a fiscal body. I mean, maybe, I don't even know if you could write a resolution that said I could pay it anytime it became a negative if there was cash. I'm far more comfortable coming to you guys saying, hey, there's this negative we just need to take care of. The money exists, can we do that? Cause I feel like that's really more your oversight than mine personally. So, anyway. So that's it as far as the reports.
Okay. Any other questions on the reports? Okay. Last item on the agenda is the 2026 budget preparation and timeline. We're going to be having a presentation this evening.
We are.
Do you have any highlights for us tonight? Sure.
Yes, so Mayor will be giving a presentation tonight over the budget overview. I have today gotten 2 emails from council members. Unfortunately, I've been in back-to-back meetings on budget questions and I don't know if I'll be able to get that before 7 o'clock.
I'm one of them, so and I immediately said in the email,
Okay.
no
Yeah,
expectations that you need to answer.
Yeah, so we'll get those answered as soon as I have time tonight. It probably won't be before council, but there will be a very similar presentation like we've done in the past and what you guys have seen so far.
Well, I appreciate you giving me quick feedback on my questions and I appreciate that. So thanks.
Yep.
There is a release going out at 4 p.m. too that highlights the budget process, what the proposed budget is and what those highlights for infrastructure, public safety, et cetera include. So that'll go out at 4 o'clock.
Nothing locks us in though on the
Nope,
proposed
it
budget.
says it will be up for adoption at the October 13th meeting.
Okay.
Okay. Any other discussion items? Hearing none. Motion to adjourn?
Motion to adjourn.
Second.
Meeting's closed. Thank you.
So Kayla,
Yeah.
that's deeper than it is.